Okay, guys, just a quick one. Um, yeah, the smiling wonders there. What are you gawking at? This is my job, not your job.
Yeah.
Shut up.
Easily distracted.
I know. I am this morning. Anyway, I noticed a couple asking about MACD, so I thought I'd just quickly flash it up and just tell you something quickly about it. Get rid of this. Get rid of the Bollinger Band, and we'll pull it up so you can see it. Right. MACDs are ideal. All right, so we'll just get rid of that altogether. But why are the ideal? Well, if you're having Bollinger Bands and everything on the screen, the real estate of the screen can be very, very cluttered. Let me show you what I mean. So you got your Bollinger Band on, and you're thinking, yeah, this is cool. But then you got all of your different lines on. Well, if I was to start putting on a couple of moving averages, for argument's sake, even if it's just two, I'll change that to the 100 rather than the 20. It starts getting choppy and messy because what I want to see up here is just the price. It's all I want. So if I get rid of that and I use a MACD, okay, just drop a MACD on, it means my real estate up here is clean. Now, I often use an awesome oscillator for the same reason, and I'll change the settings. You'll see me put an awesome on. I'll show you an awesome just if you've never seen it before. And I can change that to a 21 and a 50. And what that's doing for me, it's just a moving average, but it's telling me whatever's going on is short, all right? Because the 21 is below the 50. So if I put them moving averages onto the screen, that's the direction. But it means it's kept that clean, but I can have a quick eye shot at an awesome, and it'll tell me what the direction is. Now, a MACD does exactly the same, and I'm not really bothered about the lines, in fairness. I'll just move this up so you can see it. These lines. What I'm interested in is this center line, the histogram, whether it is above or below it. Because when it crosses sort of there, that's when the histogram changes. All right. So they're actually doing the same job. Okay. But what I do like to see with the lines is I like to see them flared out, which tells me there's pressure coming. If they are sitting together like that, I'll just class it as zero, not doing anything. Okay. Now we can adjust these, same as principle as your RSI. If I'm looking for a longer term trend, I will up the numbers. In fact, I'll slow it down. But if I'm looking for the here and now, I'll change them into the nearest Fibonacci numbers. Why? Because I work with Fibonacci and I know that it repeats in nature. Very, very simple way to process the charts. So if I'm going to quickly work a bias out, I can do it using a few MACDs. You know, I can look at a 1 hour, yeah, it's going down. Drop it on a 15-minute, yeah, it's going down. Drop it on a 5-minute, yeah, it's going down. So that'll tell me that the trend is roughly going down. And then I'll just confirm it with an RSI. But that's basically what I use a MACD for. I couldn't care less about triggers or anything like that. I just use it as a quick eye shot to see what the market is doing based on the maths that's plugged into it. I hope that helps. It's a bit easier than typing it out. Catch you in a bit, guys.